knowledge, give away information. Some of my clients came over from my firm before, so they're all great referral sources. So
Okay.
that's kind of how I like to grow organically. I made a lot of cold calls, is what I'm saying. My prior firms,
Yeah.
particularly cold call people. I have circles of influence. I'm not expert in everything. I know what I don't know. I know what I do know. I said that
Hmm.
backwards. Uh, Socrates type thing, the only
Yeah.
person who knows anything is that they don't know anything. But what I do know is I can find any answer. I have some professionals that I can lean on for certain areas, like if it's a, a difficult tax question, have EAs you can talk to. If it's a law question or trust question, I have attorneys I can talk to. And another good thing about that is with it being local, these are usually people who I've known for pretty much my whole life as well, who've gone off in their uh, professional career. So intelligent, knowledgeable people. And then, like I said, just people, if you do good work for people, like you gotta give it away, right?
Yeah.
Like you do things, it all comes back. If you do bad things, those are gonna come back too.
Yeah, absolutely. That's a great thing to have a business that just runs mostly on referrals and not having to always fish and kind of see what's out there and spend that time because you're right. I mean, I think there's several studies that have been read that if someone refers somebody to whether it's a doctor, a CPA, a financial advisor, they're more than likely going to go with them versus me just randomly getting called by that individual or just me trying to find you online. So that's absolutely true. And that's a great practice to have, especially if that's kind of how you run your practice. Now, um, when it comes to actually, let's say you get the client in the door um, through LinkedIn or other marketing efforts that you do on a typical week a great client experience is a key differentiator for a lot of firms because at the end of the day, we can all say that we all do similar things with the investments and the allocations, but truly what separates a good advisor from a great advisor is that client experience and that trust and making sure that they're knowing that you're their person no matter what, good and bad times. So can you kind of walk us through and some of our readers and listeners too, like what's your meeting process? Because when I worked at firms, it was maybe we had 3 meetings and then they would close to become clients. One would be a review, one insurance, one asset allocation. What's kind of your process for when clients come into the office or you have those Zoom calls online with them?
Perfect. Yeah. So my process is probably a little bit different. I don't know. So the first meeting is going to be just a get to know you meeting, just getting to know me, introduction meeting, kind of like we're doing right now. We won't really pull out any numbers, like show you anything. I'm not trying to show you how smart I am. I'm trying to make
Mm,
sure that you're a good fit for me and that I'm a good fit for you in that meeting. Because like I said, the number will be capped. Not the number now, but the number will be capped eventually. So I really want to work with people who I want to work with and who want to work with me. So we'll have that introductory meeting, uh, usually 30, 45 minutes. And then towards the end of that meeting, I'll get some of their like information, let them know that we can have another meeting. And in that meeting, I'll present to them a bit of a financial plan, not the whole thing, but just some ideas, different things. I'll show them like the actual data. I'll pull out their investments and show them what their investments are doing now, maybe some things you could change to make them do better. Because a lot of people are just in target date funds, which are just
sure.
a scam. Their
Yeah.
target date funds are, I feel some way about target date funds. I'm sorry. So then
No, I agree.
at
It's
the end of that, oh, go ahead.
it's frustrating that it's like the laziest form of investing is that type of product. But go ahead. Yeah, I completely am on your camp when it comes to target date funds. They absolutely have no benefit whatsoever, and then they're in qualified plans. That's even worse. But yeah, continue. Definitely agree with you on that, though.
Right. So then we just, and then we're sitting and we're talking. This meeting's probably like an hour. We're just talking. I'm telling them, showing them the numbers, showing them the math to it, because like I'm an analytic at heart. So I do like going in there and showing the math. I might get too deep into the math. Talk about just consequences of ideas of showing them. A lot of people think they're at a certain risk tolerance when they're really not that risk tolerance. Their investments usually off from where their estimates are.
Mm.
So in between the first, oh, and so in between the first meeting and the second meeting, I will send them out some information for them to send me back, like an investment statement, policy, risk tolerance assessment. Um, send them over any things just to let them know the process. In between that meeting, the people who generally take care of that information and get it back to me, those are generally people who want to be good fits too. It's another way that you're just kind of like phasing yourself in out the process because and even if they don't, that lets me know that this person would require more work just to get the information I need, because that's a good thing. So you have to set that standard. So usually at the end of the second meeting, uh, I'll quote them, let them know what it'll look like to work together with me. If we can either do the financial planning, which would be a holistic planning approach for a year. Uh, no, we won't just automatically charge you at the end of the next year. It'll just be a plan group, or we'll take the holistic approach to financial planning. We could do the assets under management, which is what people typically think about when they think about a financial planner. So you'll do that for a percentage fee, or you could do an investment vehicle if you need insurance or anything like that. And let them know that they can work with me as a fiduciary in one, two, or all three ways, right? So
Yeah.
at, at the end of that meeting, they'll either decide that they want to continue or they'll decide they're not ready to continue. If they decide that they want to continue at that point, we'll have a third meeting. At this meeting, we'll sit down and we'll go deep into the numbers because you do have to get the numbers, you have to do the data. So we'll probably sit 30 minutes to an hour doing the data gathering session. I'll come back to the lab. We'll meet again where I'll come back and bring some of the recommendations that I made for them, present them to them. If they are good with the recommendations, depending on the level of the level of however hard it is to implement this plan.
Okay.
It may take a couple or several more meetings to get the plan implemented. But once we get the plan implemented, so we're meeting maybe five, maybe six. Once we have the plan implemented, we'll meet quarterly after that.
Okay.
We'll
Yeah, I
do
love it.
everything we talked about.
And then you mentioned with the asset manager, that's altruist. And is that like a third party asset manager, fund manager, or what's that look like for the client? And how do they like what's kind of the benefit free up for you and for the client as well? Like what's kind of been the reason why you decided to outsource that bit versus in-house? Is it because of the practice size or just because you wanted to focus on mainly planning? Or what was kind of the decision behind the asset management side?
Oh, I'm sorry. So altruist is the custodian.
Oh,
So
I'm sorry.
I manage
You're
the
right.
assets. Yeah, yeah, yeah. Altruist is the
Awesome. Okay.
custodian. Yeah, so they're
Great.
like Schwab or they're like
Yeah. Like
Fidelity,
interactive
those guys.
brokers, all those guys. Awesome. Okay. So when you come to your asset management side, so man, you do everything. That's awesome. I talk to a lot of advisors and a lot of them will just, there's when it comes to like let's say financial planning tech stack, they use Money Guide Pro or all these other different types of softwares. Can you talk a little bit about like, when you manage the assets, when you do the financial planning, and you mentioned going to the lab and coming back, um, you know, for our business owners out there that are also practice IRA and SEC firms, what's kind of been your tech stack you use? Like, what have you found that's good? What have you found that's been not great? I know I have one IRA that I spoke to that just used Apple's Pages for their financial plans. It's like 3 to 5 pages. They don't have those complex financial planning software. So what kind of softwares are you using, Marcus? And if not, how do you kind of cultivate the plan and the asset allocation and with the amount of time that there is in the week and the business day?
Right. Yeah. So like you said, we've used some e-money guide software. We have different we're still testing out the different software, plan software, because that's a
Sure.
big commitment to commit to as far as which one you're using. I do like Morningstar. We use Morningstar to run some of our analysis in the background. HubSpot for some CRM stuff. Uh, Obviously, the whole Microsoft Office suite we use for a lot of things. SharePoint's a good thing. We use some Adobe for different things. So we use the complete tech stack. We just kind of cover up. And Altruist actually offers a lot of technical things on their side as well.
Like research and questions and yeah, that's awesome. That's very cool. So also when it comes to when we're talking about AI and data, because that's really what the IRA report is. It's really looking at underneath the hood of firms and concerns I have with people talking about I don't need a financial planner. I can just go into Chat GBT or Gemini, plug in my potential age, risk tolerance, and things like that. What do you see if we're going to look out to 2030? What do you think like a modern firm would look like? And do you think that there's going to be a problem with AI and chatbots that would take the role of financial advisors or more complement them? How do you kind of see the advent of AI with what's going on these days, Marcus?
Oh man, AI is definitely coming to take over if you're not prepared for it. AI right now, people have robo advisors that they use. People have AI that they use and talk to every day, like that it's for their therapists. Some people use AI for different things. As far as building portfolios, once AI, 2030, the market will probably be trading 24 hours a day. They're moving towards that. So it's going to be
Yeah.
hard as an advisor to trade 24 hours a day, right? To be on top of those things. So yeah, if you're not growing with the AI, I don't use AI for to building models or anything like that myself, but I know eventually that day is coming, where you can use AI or you have a strong temp behind you or behind someone who's preparing all these things. Otherwise, you're going to lose it behind in like AI. You see how it's taken over in other industries. I think Microsoft just laid off 9,000 employees the other day. And they won't say that it's based on AI, but AI is compressing the roles that people held. On the other side of AI, for someone like myself who has a smaller business, it helps because it helps with multiple hats, right? You can use AI for different type of things. So I embrace AI, but I know people like you've had mutual funds for years that just track the S&P. You've had
Hmm.
robo advisors in the last maybe decade. People want to sit down and talk with people, right? That I don't know if that ever is going to leave. I don't know if the new generation doesn't want to talk to people at all, but that's where you can differentiate yourself. It's advice. The idea is like Chat GTP can't come up with better ideas than I can. I mean, it thinks it can, but that data is still dirty sometimes. It's
Mm.
just the personal connection. It can't read into you. Like a text has no tone.
Yeah, I agree. I think the AI training is still a long ways away. I remember reading a article through Anthropic, which is one of the competitors to OpenAI, and they essentially assigned a AI that they created to run a vending machine business. And they would have a human, of course, know that there's a human restocking the vending machine, but the AI controlled the shipping or the supplies, ordering, maintenance, collection of cash, putting cash in, how much to charge, everything. And I think Anthropic was saying after like the third week, it got a little weird where it started thinking it was a human, where it was physically changing out the Cokes and the Sprites out of the vending machine. And it was like, I'm over here. And then it
Right.
added a company that it spoke to where the company's like, we don't have an employee that works here by that name. And instead of saying, I apologize, the AI said, we're going to change vendors. We're not working with you. You're calling me a liar. So, yeah,
Wow.
it's getting
Right.
crazy. There's not a lot of training, and you're absolutely right. And I agree with you 100%. Like the AI can do wonders when it comes to maybe some marketing, but going over financials and numbers, especially for humans that all have very differing financial needs, is going to be very hard for it for the next couple of years. Where a lot of firms are going to definitely be safe. So yeah, that's understandable. Now, do you come across do yourself investors, and how do you make the argument for? Well, let's say this. What do you kind of? Let's say I wanted to come to you. I am going to retire. I have maybe a couple SEP plans or a 401k, and I'm needing maybe to set up trust or just setting up my legacy and things like that. What do you typically charge clients? Do you just manage the money and just charge a fee off the managed money? Do you charge a fee on hourly, or what's kind of your compensation that you look at when it comes to working exclusively with clients?
Right. So yeah, like you said, they can pay me in one of three ways. Either they can just say I want investment, just take this money, put it in on our Truist platform for
Mm,
a flat fee. That would just be a percentage fee. If they want to engage in the entire financial planning process, that would be a planning fee. And that would depend on the complexity of the plan, right? Depending on how deep we're going into the plan to how much work they need. If it's someone who's just coming in and needs their 401k rebalanced every few months or you know what I mean? Like that type of stuff wouldn't be the
yeah.
same as someone who's coming in, like you said, looking to establish a trust. And in that situation, if they were coming in like to establish a trust, we would get to that part, but we would step way back and figure out like why do you think you need a trust? Because a lot of people think they need trust who may not exactly need trust. If it's a control issue, if you need control of what you have, okay, I understand that. We have attorneys who we could reach out to in that situation, like I said, for trust. But if it's a lot of people just the trust laws change when they get the tax cut job act. They like
Mm,
raise the limits. It used to be like hundreds of thousands be before the gift benefit kicked in. Got to
okay.
keep it on tax, and then it went to like millions.
Wow.
So all the people who need a trust to get the taxes, that's not exactly the case anymore. So people are a little misguided on trust. Just kind of tell them slow down and trust. And I know you just mean in general. So yeah, there are people who want that type of advice, just to sit down and talk about it. And even though I'll say like I can't establish a trust for you, I'll tell them quick, you need to talk to a lawyer because you want that thing like tight, legally tight. But I can
Yeah.
help you with it, and I can help you with the investments inside of that trust. So that's how I would help someone who, if they were just looking like for trust.
Okay, great. So essentially, it's like, if I come to you for asset management and financial planning, if I needed those other things that only maybe an estate attorney can handle, or even the CPA, even, you're saying there's a network for that where clients can be serviced and being taken care of in that aspect under your umbrella as well.
Absolutely. There are people that I work with, just like my circle of influence. And that, if they have some questions that they don't cover, they can
Hmm.
send people over my way and I can answer questions for them as well. So it's a great thing.
Yeah, absolutely, absolutely. This is a very great story so far. And honestly, when it comes to being an entrepreneur, have you always been that way, or have you kind of just, because I know you mentioned you've been GM, production management, pretty much most of your life. But before that, I mean, what made you wanted to just say, hey, because you did mention earlier, which we'll let the listeners remember, is that you typically don't want to start your own IRA right away. But if you're bold and you have the savings and you just really want to get out there, then Marcus has a great vision. But Marcus, can you tell me a little bit about, like, have you always had this kind of capacity to be an entrepreneur, or did you just have like an aha moment one time and said, hey, I want to start my own practice?
Who knows what capacity I have, right? Where this
Right.
capacity came from. So no, I do always remember like I have this desire to learn. So like I have this insatiable desire to like learn. I'm always seeking to learn something new, something new. Like, and when I learn something, I want to learn it very deeply, go deep into what I'm learning. I don't know, like when I first started, my first experience, I guess, as an entrepreneur would start when I was a child. There was a lot of us growing up around, like we were family. I grew up with a single mom for most of my life,
Mm.
but like my family was around, so it was always a great experience. We didn't know we didn't have, we didn't have. We had a lot of love. So one of the first things I did when I was like 4 or 5 is I bought like a gumball machine. I guess I bought it. My mom gave me money, and you could put money in it and get gum out of it. And I
Yeah, yeah.
put it up there and let my cousins get it, and I got those coins. So that's probably when it first started. And then in high school, I took a business class, intro to business class, and just kind of fell in love with business from there, man. Like that's really where it sparked off. Was like senior year at Sun Valley High School. It was just, or I'm sorry, like freshman year at Sun Valley High School, and then just you join different clubs throughout the time. I've always been business minded, so all my majors have always been business. And then as far as just being entrepreneurial, it's just like, yeah, people have different thoughts on the risk of being entrepreneurs or not. But and this isn't my idea. I didn't come up with this. I heard someone else say it. It's a great thought though. Like if you're a W-2 employee, not knocking W-2 employees, or 1099, you
Hmm.
really are you're 100% dependent on the employer. Whereas if you're an entrepreneur, you have different ways to you have more control in my mind over how you can earn income. If you have 100 clients and 10 clients fire you, you still have 90 other clients. Whereas if you only have one job and that one job lets you go, you don't have any source of income. And outside, maybe you have investments, but it's just kind of different type of mindset. So I guess to get back to if you wanted to jump into this, yeah, well, first of all, you have to pass certain tests. So you will have to have knowledge. So that's a good thing about RIAs. RIAs, people who work with people RIAs, they do have knowledge, right? Because those tests aren't to some people they're easy, to some people they're hard, but they're definitely something you have to spend time in learning.
Yeah. And another thing that a lot of people don't realize, especially with IRAs, which is really great, a lot of people think, well, if I need to be a financial advisor, I got to go work for a firm, and all these big firms may not hire me because I don't have the caliber, the background. And a lot of people don't realize IRAs, you don't necessarily need to be hired by a firm to get your licensing. So IRAs, you just need your 65, and you can take that yourself. And, that's definitely a long study. I can't imagine. I remember when I first took it, I think I did like 6 months, 7 months, failed the first time, second time got it. But yeah, it's one of those practices where if you're lean You have some savings and you have a supportive partner, or just, just yourself. And maybe, I have a dog with me as well that I'm like, he was my first employee, he'd be in the office with me every morning while I'm making calls. But yeah, it's like one of those things where it's this practice is very unique, very lucrative if you can, find that niche and make sure that you're kind of sticking to the grind every day, and not really focusing on things that are kind of less important. So, when it comes to that, when it comes to wearing all those hats, like how do you decide what to work on each day, Marcus? Like how do you balance the urgent tasks like client requests, ACATs, transfers, or meetings, with the important long-term work like business development? So like what do you use as your personal philosophy, or like is it just you kind of get to the desk and then you address it? But what's kind of the way you've done your structure of your firm every day when you're addressing those priorities?
Oh no, I'm very structured. I'm a time blocker. I know it sounds cliche, but I block time off in certain amounts. I'm a creature of habit. Like as far as like how my day starts, how my day ends. The first hour and pretty much the last hour of my day are always gonna be the same. Stuff in between may be a little bit different. But like even like with writing, like I'll still write, but I don't have as much time to write or be quoted anymore. So I'll block off like a couple hours on Tuesday or Wednesday, maybe for
Mm.
that. And I'll let anyone who I may already have a relationship know, like, if you need anything, just let me know then, because I can get it done for you then. As far as clients, anytime if I need to meet a client, that's going to be my top priority because they have something that needs to happen. So I'll schedule around that. But every day I'm up. I'm up for most people. It's a real old man trait when you start telling people how early you get up. So just like I'm,
Yeah.
I'm up before most people. Just seeing what's happening in the markets. I love the markets. I love the way these things function. And then, yeah, so by the time most people probably start their day, I've accomplished a lot of different things. And by the time the market's open, I'm ready to tackle that aspect of it as well. One thing that I try to make uh, time for is to take a break from working every day, at least from like, 30 minutes an hour. Because when
Mm.
you're a solopreneur, you will find yourself working, it'll be, 8, 10, 12 o'clock at night. Those
Yeah.
days happen. They just happen. You look up, you're like, oh, well, this has been a long one. So try to block off time and always try to make time for the family as well. So you have to make time where you're not available. Your time's your most important asset. People tend to
Yeah.
think that is money, time, because people with money can't buy time. You can't buy more time, I should say. Like you can't buy a way to live longer than you're going to live.
Yeah. I think there was that gentleman on Twitter. His name's Brian something, but he has this don't die thing. And he's 50 now and he looks like a 20-year-old, but he spends several million dollars a year on medications, injections, and things like that. And he looks super healthy. But you're right. Time, you can be a billionaire and be Elon Musk, but you still can't fight, death in Texas. So that's
Right.
absolutely true.
My wife and
Um,
I watched that. He has a Netflix special about him.
yeah.
Yeah,
Yeah.
my wife's another very important part of all this, man. She's a great
That's
part.
cool.
Yeah.
Yeah, my spouse, she's been with me 6 years, and when I started my first firm, I was making nothing for like, and a lot of people don't realize that either. You're not making a
Yeah.
lot of money, the first couple months. It's like any business, it's not like I can go. Maybe if I were to go door to door and I had a landscaping business and I go for a week, I can land a client or two clients and that'll cover my bills. But with IRAs, you're paying a couple $100 to register with the state. You're paying a couple $100 for your fees, for your licensing, your LLC, everything. And then you got to buy the CRMs and you got to buy the technology and then you got to figure out like what partner you're going to be with. So it's a long process, and I agree with you completely. It's not something where everyone can do it at the end of the day, especially given the volatility and just having to be responsible for somebody else's money at the end of the day. And so, given that extra burden you guys have and everybody has in this industry, given that current market environment, I know today's the first, and obviously the jobs number came out. I think we did like 147,000 jobs. But what's kind of the Marcus single most important conversation you're having with your clients right now, given the presidency and just kind of how you look at the world when it comes to the assets moving back and forth between the U.S. and Europe and the Middle East and all that? What's kind of on your radar that you're seeing is going to happen, or what you forecast or kind of look at to mitigate for your clients in the future?
Got you. So yeah, well, it, one thing I like to think about with clients is, like I said, I'll send things before we start. So we're gonna have these investment statement policies, these risk tolerance assessments, and we're gonna go back to the why. That's why the why is so important. I'll spend a lot of time talking about the why. Why are we investing this way? Why are we? What's the long-term goal? What's the short-term goal? Where are we trying to get? As far as the noise that's coming in outside, I call it noise with air quotes. It's not really noise. There's a lot of stuff going on, but I try to look through that with my investment policy and look at, actual companies and earnings and things. You can't control everything. There's always going to be something if you look at the stock market, if you look at the history of the economy, there's always something that's going to happen. Be it Desert Storm, be it the dot-com bubble, be it the housing recession, or be it COVID, right? And then we just
Mm.
have what we had at the beginning of the year. There will always be something that's going to happen. There's always something that's coming up. Sometimes I'll tell that with potential clients, the ones or prospects. They'll be like, well, we can't do it yet. There's this came up, that came up. There will always be something. There will always be something that's going to come up. Let's remember why we did this. Let's go through this process and let's get to and remember what the end goal is. We like to look far out and pull it back in. People talk about your hierarchy of needs, right? Where if people don't have those basic needs met, shelter, food, etc., then they can't make informed decisions about whether or not they are going to invest or just go all the cash. Like I'm never going to tell them to go all cash, but if they won't go all the cash, something like that. You
Yeah.
have to understand like mindset and mentality because people, when you start, you can sit down with someone and say, "We're going to buy low and sell high," but people do the opposite. People
Yeah.
sell low and buy high. It's just like the mental mind state behind everything. So I think that, and this is for anyone looking for a professional to work with, you should take that hierarchy of needs into looking at them as well when you go into like, is this person, because clients can tell if you're like, if you need this sale or whatever, right? They can tell you
Mm.
you need to work with someone who's has their bases covered already so that they're not stressing about their money and making some kind of decision to try to make a faster buck or a bigger return, right? They need to be mentally stabilized as well as you. So it's just the mindset. Like I said, we'll pull this stuff out. We'll talk. Like if someone wants to make some big drastic change, why did something change? Did I miss something here? What we talk about? Our plan in January change from April. And I'm also calling people. Like if I see it going bad or if I see whatever I see, I'll call my
Mm.
clients ahead of time. So April, when it went to whatever it went to, I was talking to my clients. Like I was calling them. They don't have to call me in that situation. And I let them know, like, I'll reach out to you if I see something. So they know if I'm not calling them, like, and I'm not gonna call them panicking ever, because I know that in the long run it goes up and to the right.
Yeah, absolutely. I think that's a great proactive approach because, when I worked at firms or, I remember we did get the most calls when the Capitol storm into Capitol happened that day. And that was a lot of calls and clients were wanting to get out. And I was just like, man, this is overwhelming. And then, of course, the major one I remember was when Facebook IPO'd, and the Facebook IPO was delayed, and everybody was freaking out. And just the day before, they were selling out of their mutual funds so they can purchase the IPO shares, and they paid the fees. And
Mm,
yeah, you're absolutely right. A lot of people and a lot of advisors, especially those that are maybe tepid or just, don't really want to face kind of what's going on, will delay calling clients. And that's where other advisors, maybe like you and other firms, start to, pick off at some of those clients because, no one else, like I said before, is going to call them. Then you certainly will, I imagine. So that's definitely very interesting. And when it comes to like, the future of the firm, and as we kind of close up and wrap up here for yourself and just for every with the firm itself, like what's your vision for the firm's growth? Like, are you building a practice around your own capacity, or so I know you mentioned you only want maybe 100, 150 clients, and I've seen a lot of IRAs, and some of them are well intentioned, some of them just don't understand anything about how it works. And, they may sell a course on TikTok or something like that, how to become a money manager and hedge funder and all this stuff. But when it comes to your vision, like, are you wanting like a lifestyle IRA? Are you looking to maybe get it acquired, or, maybe pass this on to another legacy? But, what's kind of the systems you're building now for the future and going forward for yourself?
Right. I guess the term would be maybe boutique, but the asset size will be more than boutique. Uh,
Mhm.
yeah, it'll be, it'll be something. Like I said, I enjoy what I do, so I don't ever like really see myself like retiring from this.
Mm,
There are people who just don't
okay.
really retire. Like people just continue to do what they do. So in some form or capacity, I do enjoy financial literacy. So I serve on board director. So eventually, I'd like to spend even more time helping on that side. But once I reach to maybe my capacity. Yeah, I would love to be able to take the time and if any of my children decide they want to join in this environment one day, sure, man, you can sign on and
Yeah.
But it would have to be someone, it would have to be someone that would be, that understands me, understands the ABC squared, the philosophies that we live by, breathe by here. We're helping Main Street and Wall Street. We're just trying to help normal people with
Yeah.
everyday problems. But there are also like people don't like you said, there are people there are people who have W-2 jobs right now that I know that who would just be great financial advisors. So maybe one day they'll like realize it and maybe they'll want to come work with me. I don't know. But for now, I'm looking just to keep it with myself, grow as needed, but I'm never looking to have like even if I was to bring another advisor on or eventually maybe say one of my children or something, we got to another point, I wouldn't want them to have more than 100 and 150 clients either. Like we're not going to be the place where one person has 500 clients, 1,000 clients, because then we won't be able to do the type of work that we want to do. We're not helping people the way we should, in my opinion.
No, you're absolutely right. Quality over quantity is kind of, especially in this game, very valued. I think there are a lot of firms and a lot of advisors that may just turn a client for a couple annuities, couple insurance, maybe throw them into an IRA, and that's kind of the only real talk. And then after that, they're on an email campaign, for example, for updates. So that's good that you have that method and the ideal about, I want to be very boutique niche. I want to know all my family's names. I want to know their spouse's names. I want to know their kids' names. I want to know everything about them to the point that, if someone were to pass out my clients, then I know what to do next with their money and they know to come to me. So that's a great philosophy. I really like that. You mentioned that, Marcus. Um,
Exactly. Have you
yeah.
ever have you ever seen the show Silicon Valley?
Oh, I love Silicon Valley, Dinesh. And I mean, that's
So
why I sort of got into this business. I used to be in finance and manage money and do everything, but then I'm like, I discovered the data side and I'm like, it's so lucrative and it's better. But yeah, that's
so
my favorite show. But what's the reference
so
you're going to
so
say?
in a perfect world, my RIA would work like middle out compression.
Middle out compression. Yeah.
Like
Like,
what they were
I
trying
don't
to
want
get
to do
where
it
it's
for the
just like
show, but yeah, the figuring out the
right.
middle out.
So that would be,
Yeah. That's interesting. I'm actually talking with a developer right now, and we're trying to create something for what we call the brain at the moment, where it's essentially an all-in-one employee, and it's an autonomous bot. And I'll write about it later, but you're exactly right. Like the only way that you can get it to work is you have to make the files smaller, you have to automate it, and as well as getting it smaller, it has to push out the new thing as well. So
right.
yeah, that's a
Exactly.
funny show. Anybody, if you haven't seen Silicon Valley, I promise you it's so true to what's going on in Silicon Valley and BC capital world right now, to the T. And especially with AI, everybody's getting money thrown at them with the pulse, even if it's vaporware.
Right.
Um,
Vaporware.
Perfect. So Marcus, can you tell me a little bit about, what's been the most unexpected joy? Let's kind of get lighter here of being a founder. I mean, I know you mentioned earlier about you're an employer and you're an employee, and the employer decides to sell their business or decides to get indicted or something happens and you lose your job. So like what's been kind of the biggest joy you've found being a founder of this practice?
It's all the biggest joy and the biggest fear. That's like it's all on. Well, like I said, my wife too. She helps a lot. But as far as like going out and getting, it's pretty much all on me with that.
Mm.
That's a thrill. It's exhilarating, but it's also like it can be, a thing to think about and in the long run of it. But I enjoy the freedom it provides. It allows me more time with my family, believe it or not, because it just takes some of the things away. I know we spoke offline. I was telling my sister-in-law is sick now. My children just getting older, just want to spend a little more time with them. So it's a great thing. If you are a person who doesn't mind learning and working hard, you're gonna have to work hard. I think people think that just because you own your business that you don't have to work hard. You need like things are just gonna come to you. You need structure. You gotta have your structure. I'm a structured person, so I like the structure. I like the freedom it provides inside the structure. I like to be able to think creatively and freely. Right. So, and also one of the biggest things would be with the media, like when you type something, if you're at a big firm, you gotta send it into compliance to get it
Yes.
reviewed. And by the time it gets back, they probably told you to change it maybe, and then whatever you're doing it for is probably already passed. So I know not to say anything like crazy and make personal recommendations when I'm speaking on broad things.
But
Protect
just
myself.
having that freedom to be creative, because I agree with you. When you work at a wirehouse firm, and my very first advisor job was at Merrill, and I remember going through development, and they had a whole week of just you can't send anything that we don't pre-approve. And you're right. When you're running a campaign or you're trying to get a certain, let's say something happened with the market that week, or a certain tax law change happened, and you want to get it out to clients so that you can maybe get some, referrals and things like that. And you're waiting a couple of weeks to get approval. So that's a good point as well. The freedom to be creative with what you're doing, and you being the end of the day person that decides this is the vision and the track we're going on. So that's very cool, and that's quite a rare thing in the world we live in now. People pretty much always working 9 to 5s, very afford to live. But now that you've got a firm and that you're growing, what's one thing that I guess you would say that you desperately wish you knew day one, Marcus, before launching your firm, that if I were to do this over again, or if I were to tell someone else that's new to the industry, what would you do differently than maybe what you've done so far, if anything?
Okay, so like I said, you probably will want to work with like another firm to get
Mm,
started. But truth be told, I would have liked to start it sooner. I would like to done it sooner, right? Like gotten started in the process sooner, gotten this business going sooner. Because it's like I said, so with the creative freedom, with the lifestyles that changes, you still have to work. You still have to work very hard. Like don't think that there's like a magic pill to success for this. It's about the reps, whatever your reps may be. Some people make cold calls, some people go knock on doors, literally, knocking on doors. It just depends on what it is, but whatever you do, you're gonna have to put in the hard work and you're gonna have to put in the time. So I would I would tell myself to maybe give myself more time for the process. Don't get frustrated with that because I just thought it would be, I don't know, 6 weeks to get approved, and it ended up being
mm.
almost twice as long as that. So just with that time, but that time also worked out where it just gave me more time to be more creative and just type and write things and talk to people because in that processing time, you can't prospect, you can't go out and try to get clients, like you can't do that. So it's just more of giving away information at that time, just giving away knowledge, whatever knowledge I may have.
Yeah. No, I agree with you. I did the same thing with the state of Arizona corporate commission. It took what I thought was going to be a month, and it ended up being 2 months because I had a weird structure, and they kept asking me follow-up questions after follow-up questions. A lot of people, and glad you point that out, Marcus, think that if the firm's going to start up within 30 days and you're going to be rolling in clients and managing assets, and it's rarely the case, especially when it comes to the approval process, which like you said, minimum takes 30 days sometimes. So it's smart that you were, like a lot of people, very structured, where you want to build out what type of clients am I going to work with? What's the campaign? What's our niche? What's kind of like how we see ourselves versus the world of other firms, and what's kind of our driver for clients versus what's generic out there. So that's awesome
Right.
that you guys have that. Now, when it comes to yourself, I mean, besides the firm, we talked about business, we talked about your clients. Now, tell me a little bit more about how can clients reach you? How can firms reach you? Do you have, I saw, I believe you have a website. Can you tell us a little bit about, how clients can contact you, and how firms can get in touch with you if they choose to when it comes to sharing clients?
All right, yeah. So we have a website, the ABC Squared. You can go
Okay.
in, get on the Calendly link there. We can connect on LinkedIn. I'm on LinkedIn, Marcus Sturdivant Sr. I have a junior, so Marcus Sturdivant Sr. on LinkedIn. Actually have a page with my name that I just said, all in one word, with a collection of some of the things I've been quoting in with the media, a couple of podcasts. So that's like if someone wants to get in touch with me, you can go listen to the podcast. You can read some of what I've been quoting in. Like that's a good way with the media to figure out maybe if you even have the same type of philosophy and investment that I may have, because I'm pretty transparent when I put this stuff out here. Uh, if you think maybe you would want to work with me that way, it would be a good way of seeing my voice, seeing how I operate.
Yeah, absolutely. And, to readers and listeners, I'm going to include the Skeptic's Guide to Investing. I thought that was a really great initial podcast when I heard about Marcus, and asked him to come on to our initial inaugural post and podcast, because being a new firm ourselves, also want to talk to new firms at big firms. So I'm glad that you came on, Marcus, and I will include everything in the short show notes, your podcast, your website, and of course, where you were featured, so that if readers and clients would like to take a look at it, definitely, I encourage everyone to do so. Before I let you go, Marcus, I want to say thank you. Happy 4th of July. But let me just ask one more question for some of our readers. What's kind of the most impactful book you've recently read, be it finance or non-finance, or what's kind of a book that you're like, I found myself reading it a couple times. It's had different iterations or understanding and meaning to it every single time I read it, and it's helped me in my business life or my personal life. What kind of book do you think that would be for you?
All right, so it's interesting. I didn't know that you realized I was a reader. I do like to read. Like I read different types of things all the time. So like I read
Yeah.
like two or three different types of books at a time. Like one thing is like just technical, like
Mm.
for like right now I'm doing CFP study, so I'm reading that technical stuff right now. So I'll spend yeah, I block off time for reading every day too. So I'll read that. Then I'll have something that's not technical, like I'm reading The Wealth of Nations now, but I've read like stocks for the long run before that, 10x easier and 2x. But the book that I kind of continue to read and I love is The Art of War. Once
The Art of
again,
War.
so
That's a good one.
cliche, but The Art of War is just as far as like sitting back and seeing the vision and knowing different things. I really enjoy the art of war.
Yeah, that's perfectly eloquent. I can definitely agree with that. It's one of those books where reflection, understanding, and just making sure that thyself. Essentially, that they know thyself.
Right.
And that's really cool that you have that book as your
Marcus, welcome to the
approach as well.
podcast.
So,
Marcus
Marcus, I want to
Sturdivant
thank you
is
so
a
much. And
financial
like I said,
professional
I'll definitely
passionate
include
about
everything for
empowering
our readers and
individuals and
listeners in the show
families
notes. How
through
you can
financial
contact
literacy.
Marcus,
With
his
a
firm, and
focus
a
on
little bit
personalized
more about
guidance
his
and
other podcasts
goal-driven
and features he's
strategies, he
done.
helps clients navigate
But
life's
again,
key
thank you all for
milestones, from
listening
buying a
to the
home and
initial
funding education to
inauguration
planning for
of
retirement.
Behind the
Marcus
AUM.
believes
And
true
Marcus,
financial
thank you very much
success
for coming
stems from
online with us as
confidence,
well.
clarity, and trust.
Yeah.
Beyond
Thank
his
you so
work,
much,
he's a
Stephen.
devoted
Appreciate you
husband
having me
to
on.
Brittany and a father
Awesome. Thank
of
you very
four.
much.
First and foremost, how did you
Awesome. All right. Let me end
get
recording. That was
started
awesome.
in the financial world?
Perfect. Yeah. So first and foremost, I guess I got started in the financial world just by being in the 80s economics type world. Actually, first started learning about finances, financial literacy back in high school. I got a job and realized
Nice.
I needed just to earn some more money. Went to college. I always liked business and business courses. I worked at
Hmm.
a small business for a while, for a long time. Over a decade, I learned a lot about the small business and the way that works. I went back to school a little bit while, got some more degrees, and then I got into the actual like finance world of uh, investing. Obviously, you already invested inside like 401ks, but right around the first Trump presidency, I took up a liking for it, and then I got my
Hmm.
series as my license and all those things a few years ago.
Interesting. Here's the thing. Like, my background's in science. I'm curious, what did you study in college? Did you study finance, like economics?
Yeah. So in college, I always liked business. So I had an undergrad in
Nice.
business administration and law, and then my post grad, I got an MBA. But I will tell you this, that the series certifications that I had to study for, like the FARA test and those type of things, like having an MBA or having a business degree, or like it maybe gives you a little bit of an advantage, but it doesn't give you much of an advantage because that's just like different jargon, different technology.
Yeah, why I was saying, like, I was in the science realm, and finance always seemed like a world apart. Fancy terms, it all seemed complicated. And then I spent a lot of time, learning about it, and it's unfortunate because, how can you be successful in the business world, even as an entrepreneur, when you don't understand the structures of finance, of foresight, of intelligent planning? And unfortunately, many people get caught into it. And also, like, when you wake up, it's almost like I wish I knew earlier, because this is all about pivoting early. So I guess jumping right into this, someone's just graduating college, what's the first piece of advice you'd give to them to even just adjust to the mindset of creating a healthy financial future for themselves?
It's a good question. So the first thing I would do is tell them, or if they're already starting a job, if they have a career, whatever they're doing, the big long and short of finances and having more at the end is that you have to save more than you spend, right? So you have to realize that you have to get in the habits of just start saving,
Mm,
figure out some type of savings, look at your plan, think further out because you're eventually going to be at this retirement age. I know it seems so far out now, and don't be intimidated by the terms that you're going to run across. Okay. Because you're going to run across some terms that might seem complicated when you just jump into the finance, the jargon of it, but it's all pretty basic, simple economics when you look down to it. Like I said, you just spend less than you make. And at the end of the day, you will be out ahead. Now, if you want to get into, deeper type of investment type of advice, so I'm going to pick up a book and start reading, just something simple, just so you understand maybe assets and liabilities
mm.
and what you want to gain and what you want to have. And that'll be a good place to start.
Yeah, I feel like it's just the fancy terms are just for finance people to make it sound like what they do is complicated. So here's the thing. We're jumping right into AI because it almost seems like it's secondary, but it's not. It's heavily related to where this industry is heading. And I'm sure when you first started, the financial world was fundamentally different than it is today. We're entering a world where the focus of finding stability and success around physical labor is slightly diminishing. And people who are pivoting towards crucial assets are going to have a really successful future, perhaps generational wealth. And you're also seeing a shift of even certain assets shifting from one to another. And I kind of want to jump into the financial market really quickly, talk about crypto, because you're seeing a switch. People who are dealing with even just really fundamental assets like gold that have been around forever, you are seeing, and it sounds like it's a weird time to have this discussion because gold just hit an all-time high and it's been uptrending and it's going to continue uptrending. But where I'm going with this is that you have assets with a market cap that is 1/10 of gold, but it's going to be the future. And I want you to talk about Bitcoin. I want you to talk about other cryptos and how much of a portfolio would you recommend we allocate? And would that be a good place to start?
Okay. So as far as crypto goes, when it comes to crypto, I usually am only referring to Bitcoin because there's so many different types of crypto and coins out there. Like it's once again, we're trying to talk about just getting started when investing, right? So you want to pick something and you want to start with something. Bitcoin is like a large cap stock investment. Like as far as the crypto goes, it's one of the more well-known uh, tokens. The government's investing inside crypto, inside of Bitcoin. So it's just
Yeah,
governments across the world, like sovereign nations, are increasing their Bitcoin.
that's it. That's it right there. And by the way, just to point out, the amount that gold corrected in the past week from its all-time high to where it is now has the amount that has left that asset is greater than the entire crypto market cap. I'm not just talking Bitcoin. I'm talking Bitcoin, Ethereum, Solana, just everything combined. That's just to put in perspective how small this asset is relative to even stocks like Nvidia. And it's a high risk volatile asset. And you're right to say Bitcoin's a good place to start because Bitcoin is really where you should stop and end if you're not studying the market. And risky, right? I imagine you wouldn't recommend we go all in on crypto. So like, how would you, and even just taking a step back here, forgetting about crypto for just a moment, like broadly speaking, how much of your portfolio would you recommend you allocate to various assets?
Got you. So yeah, that depends on what stage of life you're in, right? As far as
Mm.
what you need to be invested in. One thing to think about right now with this crypto is that, and just investing in general, you think about meme stocks and those type of moves, you have a different type of investor now. So there's a great wealth transfer going on from like an older generation down to a younger generation. Inside that same wealth transfer, you have a transfer of men passing away and passing their money over to their wives who are getting these assets. You have a different generation with children who are now like who are staying in their houses longer, just more attached financially to their parents longer. And then you have crypto coming in. So it's a different type of investor, whereas older investors might have saw gold. Younger investors now see Bitcoin as the same type of
Yeah.
investment. So like you said, gold's been around for thousands and thousands. I guess depending on how long you think the world's been here, millions of years. Gold's been an asset. But people look at crypto as digital gold. Crypto's not quite digital gold. Crypto has its own, Bitcoin especially has its own movement. Sometimes it's risk on asset. Sometimes it's a risk off asset. But
Yeah.
as a store of value, that's where people are seeking it. And the current environment is bringing more utility to it as sovereign nations, as I mentioned, add crypto to their Bitcoin, to their reserves. Obviously, we have an administration where I think they have like billions and billions of dollars in crypto and Bitcoin as well.
Yeah. Yeah. It's mainly from seized assets, but, you know, they're not actually buying crypto yet. Hopefully one day they will, but let's talk about traditional stuff for a second. So the American dollar, right? It's seeing a unique shift today. And, you know, you're starting out, you got a few bucks in your bank account. Instead of keeping it in your checking or in your savings, you move it to your long-term savings, and you're getting, you know, accruing interest of between 3 and 5%. So to me, you know, that's the kind of 101 advice I used to get starting out. Oh, put it in a high yield savings account, you'll get 5% earnings. And I'm doing the math today. I'm like, I'm not even beating inflation. Like, I'm barely beating inflation. Like, this doesn't make any sense anymore. And plus, the currency is being devalued. Ultimately, it's going to have to be devalued to an insane extent, because that is really the only way they're going to be able to manage the current debt crisis. So, I mean, you know, crypto seems volatile, but it seems like it's the only asset that you really, even gold, there's more of it. We're finding more of it, you know, and it's compared to something like Bitcoin that's not going to depreciate over time. Like, I would love to find other, you know, places to kind of poke around and look into. But would you agree with me that, you know, the US dollar might not be the best place right now to put all your money in, and you might want to be getting more diverse in how you make investments?
Yeah, so the dollar, one of the things that people have noticed with dollar definitely has been on a steep decline this last few years. We're looking for a stable dollar, right? So the level is important, but the stability of the dollar is even more important because, yeah, eventually we'll go from a dollar. I don't know if that's happening next year, next 5 years, next 10 years, but while this dollar is lower, you can invest in, that's why you see like international stocks tend to do better because that dollar is lower. You can buy more money with international stock. That's why money tends to go abroad. As far as you were speaking about the deficit, they're looking to lower the interest rates. They're not saying that's particularly for the deficit, but those type of things are just reducing the short-term amount of rates that they have to pay on the deficit in the short term. So yeah, you definitely want to diversify, especially someone like our age, having a percentage of crypto or some type of alternative. I won't even say crypto, just alternatives. Whereas before you traditionally had 60-40, now people are having 50-30-20, 60-20-20s. You know, it just depends on where you're at and your risk tolerance. If you have time in the market, you're not jumping in and out of these trades, even with Bitcoin or a stock. If you're staying in there long enough, you'll see the returns.
Yeah. Someone even listening to this conversation is like, this all sounds way too technical, right? Where would you give them advice to start?
All right. So to start, let's say you have a workplace plan. All right. If you have a workplace plan, you don't understand anything inside the workplace plan, set up, contribute to it as much as you can. If you can't figure out a number, at least contribute to the match that you're getting back from your company. Like that's going to be the number one place that you can get a return inside your 401k. Besides the actual investments, you're getting the free money as a return from your company. If you do want to look at something like crypto or Bitcoin, if you don't understand it and you want to see how it works, I would suggest buying a small amount, maybe the amount that you would spend on a nice dinner for two, or maybe the amount that you would spend, depending on your socioeconomic class, what your amount of income and cash flow, and maybe the amount you would spend to go to a nice sporting event, right? Buy some, see how it works, start small. Because as we saw with crypto and Bitcoin and stock market, these things go up and they come down. We just saw the pullback with Bitcoin from its all-time highs, but it'll go up again. There'll be opportunities for it, and it could come down even further. These are good times right now. I know they seem turbulent, I know they seem bad, but for people who are long-term invested, these are the opportunities you want to look at. So if you don't understand, you want to buy it. You can buy your Bitcoin or your stocks or your 401ks, invest in now and just keep investing continually, and then you're getting the dollar cost averaging where it's just going to average out over time.
Yeah. So Marcus, before we get back to crypto, I want to talk about the 401k for a second. So someone doesn't understand why a 401k is important, right? Why, first of all, what's the benefit of putting money in my 401k and rather than just keeping it into an account and pulling it out when I'm older? So I want to start there with just the whole idea of like tax benefits, and like why even pivoting now is so important. Because why do I care how much money I have when I'm, retired? What is it, 64.5? I don't know how old you have to be to pull
65,
out from your
somewhere around there.
retirement.
You get your Medicare.
Yeah,
Yeah. So,
yeah,
and that's another thing with like younger investors. They can't. It's hard to see that far out. So you can't think that far out. But a couple things. So say you're a higher earner or any earner. If you contribute to your 401k pre-tax, that reduces your taxable income at the end of the year. You also have the option to contribute to your 401k with the Roth portion now. I think that's an option for people where you can add up Roth inside of some plans. So that's after tax money. And when you retire, that money is that money. That's one of my clients like to
right.
say, that's real money. Like that's your money. But with the pre-tax, you get the pre-tax benefit of at the end of the year when you do your taxes, it's a tax deduction, tax break.
Yeah,
And then you also have the investments that grow tax deferred. You will pay your taxes on one day. And one of the biggest things is the match. You get the match from your company. That's essentially free money. If they're giving you 3% to match your 3% or 5% to match your 5%. Otherwise, you could be in an IRA and get the same benefit,
yeah,
except for the
yeah.
match.
And just to clarify for those listening, when you put money in your 401k, it's money that you haven't paid taxes on. So either that money would be considered income, and you'd be paying and I'm not an accountant, so speak to your accountant, but that money that since you have $1,000 that you're going to put in your 401k, that's money that the IRS never charged you tax on. That's money that goes into your 401k, and you pull it out when you retire. And that money also, when you keep it in an investment, it gets compounded over time. So what seems like a really small amount, 3-4% a year, from when you're 25 or you're 20 to when you're 65, turns out to be a whole lot of money. So planning early and putting a little bit early on is super, super important. And by the way, you could pull that money out later. You'd be charged taxes on it. There would be some penalty, but think of it also as like things can go sour in life, and you can have real financial hardships. And sometimes people do need to pull out that money early. And there is an option where you can do that. Obviously, you'd have to pay taxes on it and you'd have to pay the penalty, but there's also benefits. I know like with certain retirement funds, you could take out X amount of dollars on your first home, right? Correct me if I'm wrong there, Marcus. You can take around $10,000 if you're purchasing a house.
For a down payment.
And that's for down payment, and you won't be paying taxes on that. So even understanding the lingo and the language, and just even doing some Google searches and watching some YouTube videos can really give you just a perspective. And that's what's important. It's not knowing exactly where to put your money at this point in time. It's about even understanding the language, the vernacular, and how to think like someone who's always pivoting. Because you're going to realize early on, you're going to do a lot of grunt work and you're focused on making money, but you have a second job. And that job is building wealth and learning how to take your money and intelligently manage it so that it can actually grow and work for you.
Right. Michael, I just want to,
Mm.
can I just clarify one thing? I'm sorry. I didn't mean to jump in.
Yeah.
You will eventually pay those taxes on that 401k money if it's in the pre-tax. So you'll pay it when you retire. That's what happens to a lot of people. If they retire, they accumulate all this money. You get to 63, you've never paid taxes on it. You say, I need $100,000 for this first year. Uncle Sam says, okay, pay me my 35%. And he's just as happy that you're retired as you are. So eventually,
thanks for correcting me. I'm gonna remove that from the podcast, because if I'm wrong, I definitely want to put that advice in there. But just so I understand correctly, when you're 65, sorry, I apologize. I don't mean to talk over you. There might be slight lag. When you're 65 and you pull the money out of your 401k, you are charged taxes.
Yeah. So if it's in a pre-tax, so you can set the 401k up, and you have it in a pre-tax part, but you can have it in a Roth. So if you have it in the Roth account, that's already paid taxes. But the Roth account won't give you the tax break that the tax deduction break that the pre-tax money will give you. But whatever is in your Roth, so you put $1,000 in your Roth, that $1,000 in your Roth goes to $10,000. When you go to take that money out, it's $10,000. You put $1,000 in pre-tax, it grows to $15,000 in the same amount of time that $10,000 does. But you go to take out the money on it, you have to pay some taxes on it then. So it's tax deferred, not
so
tax
you pay taxes later on. But the thing is,
you're paying
that
taxes.
taxable amount got compounded over time, and that actually works to your benefit.
Right. Hence why some people actually do Roth conversions at younger ages. When people talk about Roth conversions, some people never do Roth conversions, they just pay taxes at the end, but you could do a Roth conversion younger if you think you're going to be earning money later in life. Some people's goals are to have like all their money in Roth by the time they retire. And those are the people, like you hear the people online, like, I'm retiring tax free. Their stuff's been in Roth. Like they've got everything converted to a Roth. They're over the age of 59 and a half. They don't have to pay that 10% penalty, and they can take that money out. You can withdraw money from your 401k for the home, like you're saying, though, for like down payments. You have hardships and life events that you can't take money out from. But Uncle Sam's always going to get taxes. HSAs, you can pay those without tax if you use it.
Personal finances in the age of AI. So how is AI changing how people manage money, and how is AI changing the landscape of financial investments?
Man, AI is just like the rest of the world. People should get on board with AI, figure out where it's taking us. I mean, AI is going to keep running whether you're on board with the trend or not. It's helping. It can help people, just like you said, figuring out some of the terms, figuring out where to begin, figuring out just general things. Never take one person's solely advice. Like, they can sit here listening to myself, listen to you on this podcast, but I would suggest someone else go listen to someone else, listen to something different, get all the perspective that you can and gain in there. Because AI, while it's good for the speed that it accumulates information, AI can give you some really bad information. It has hallucinations, and it just might send you out some bad stuff. Have you ever Googled yourself like with AI and saw some of the stuff it comes back with, and you're just like, well, that's not true. And then like, oh, I apologize. Me and Copilot have been having that conversation. Maybe
so I imagine that the human financial advisor is still absolutely important.
Yeah, the human financial advisor is important because we bring a sense of actual connection. Sometimes people just want to listen. People just want to be heard. And I know that AI is getting to that point where people are using it for like therapists, where they're speaking to the AI as well and getting answers back. But AI is not sentient yet, right? So we still got a little bit of time with that. And then just some of the connections with some of the generation who doesn't use AI. There's still a lot of people who won't use AI, who won't use computers, who don't pay for things online. Like, there's still these people.
It's a good place to start. It's a good place to get some of the fundamentals, some of that, that vernacular, that language of just understanding. So when you do speak to a professional like yourself or a financial advisor and whatnot, you're at least coming with good questions and you're making better use of their time.
Exactly. It's all about the questions, Mike. It's all about the questions.
Yeah. So let me ask you this. There's always like these viral trends of what's considered a good investment, and you watch these YouTube videos and people are telling you to put all your money in meme coins and these coins that have no value. And it's this constant fight between viral trends and intelligent, sustainable investments. So first and foremost, why do people fall for the trendy financial advice?
Have you ever seen the old shirt or saying where it says like, the person who speaks the loudest in my family wins the conversation? It's kind of that thing. Like, yeah. Sometimes people just have they have this shinier looking thing and and it looks fancy. Like, I don't know if you've seen in the news, Kyle Busch is suing an IUL company for like $8 million, saying he was frauded for that. Like, so it's just, there's a lot of stuff out there, a lot of information out there. Be careful what you're looking at. But don't be afraid of it. That's the problem. See, people fear what they don't understand. Like you were saying with the vernacular or the particular jargon, the lexicon that we're using inside the finance, people just get lost in it. That's why, like I said, one of my main things is Main Street meets Wall Street. I speak simply so I can break it down simply to folks as well.
Yeah. So if someone comes to you with a financial advice or, a recommendation of what you might want to consider investing on, like, what advice would you give to someone as like key markers to kind of filter out, at least initially, what might be a good idea, what might be a bad idea, what's worth looking into, and what seems like too good to be true or likely just a risky investment?
Well, if it seems too good to be true, it probably is too good to be true. But if we're just sitting back and talking about a particular investment, like if a 90-year-old person comes to me and wants to buy Bitcoin, I'm going to ask them why. They tell leaving this Bitcoin to their grandchild, because there are times when age doesn't necessarily make it a part of your risk tolerance. People always assume that because you're older, your risk tolerance is going down. But depending on what you're using those investments for, like if you're leaving them for someone else's inheritance, you might want part of that portfolio to be more aggressive, right? You might want to have more aggression. So just figure out why you want to invest in something. Don't invest in something just because everyone else is talking about it, because it's the hot topic. Just step back, take a second, sleep on it, sleep a couple of days on it, call someone else and talk about it. Right.
That's actually great advice. That's actually great advice, to sleep on something. You should make a rule that from the time that you heard about the investment and the time you make the investment, you should give yourself a week or some time frame, because there's real terms out there, FOMO, fear of missing out, right? Where it's like you jump onto something, but you realize that it goes up and down all the time. And a lot of times when your friend is telling you about an investment or a stock, it's often too late. You're chasing the market. And you're really just serving as exit liquidity for smart buyers. I mean, when your mom tells you to buy Bitcoin, that's a real serious concern. That means that you're dealing with a bubble and that the market is just oversold and it's going to correct, right? So overbought. And then with like gold, where you see photos of people lining in the streets to buy gold, like that is a horrible idea. When retail is buying an asset, that's when all the smart people who have pivoted early, who have studied the market, have already taken their position. And you're coming at the very top and you never want to be there. So the secret here is you don't jump on something because someone tells you about it. Do your homework, monitor the process, maybe put $1 in the stock and just see how it goes for 2-3 weeks. Get a feel of how these things work. And then you can start inching your way to becoming more of a professional and just making smart decisions. Would you agree with something like that? And would you add anything to that?
Right. Yeah. No, that's actually some solid advice. And you mentioned FOMO. The opposite of that, well, not even the opposite of FOMO is let me remember the acronym. F around and found out, right? Like that one too, because that could be the opposite side of that FOMO. You jump in there and you find out that like this is a real investment, this is a real thing. Like, oh my God, I just lost that money. Like, don't.
Yeah, and it's hard. It's harder than money.
Yeah, if everyone's talking about it, it may be too late. Don't try to buy the highs. Don't try to buy the lows. It's hard to time the market. Very hard.
And it's a secret to know that most people lose money in the market. I think 90% of people lose money in the market. And you have to understand, who's that 10%? These are people who are extremely well educated. They've been doing this for years. They've got institutional money. They've got financial advisors behind them. This is who you are competing with. So just keep that in mind when you make these investments, that you really want to be patient. And if you were to know nothing about the stock market, and you were to do the exact opposite of your emotion, whenever you feel euphoric, whenever your friend tells you something's pumping, it's doing great, you do the exact opposite to say, oh my God, it's going to keep going up. No, you sell. And when everyone is saying, this is horrible, this is crazy, it's a bloodbath, everyone's selling, Bitcoin is crashing, it's going to zero, that's when you scoop up.
You're a contrarian.
And that's what smart people do. Sorry?
Contrarian investment.
I don't even think that's contrarian.
That's what it's
the
called.
Contrarian trader. Right. The contrarian trader who does the exact opposite. Well, it's common sense, because if the masses lose money, then you do the exact opposite of the masses. And our biggest flaw is emotional impulse when we're dealing with the market. And when you're invested more than you can afford to lose, it becomes very, very emotional. So yeah, I genuinely recommend even dabbling with the market. This stuff takes time, like years, 2 years, 3 years. You gain that finesse, that intuition, to start making really intelligent trades. And you want to be as cautious as possible in the beginning. Marcus, moving to real estate, like, do you have any recommendations there? Is that something you focus on?
Not particularly. I like real estate in the environment that we have. Like, as far as like, it's been really depressed here lately, but as far as like the home buying environment, I really like that. I think it's going to turn in I want to say the end of 2025. We're nearly at the end of 2025, but going into 2026. This seems to be an environment where the direction of interest rates are going down. That will help with the home buyers. We'll have to see what the tariff offset cost is with the input prices as far as that goes for home buyers, but the interest rate should be coming down to where buyers are looking. The supply seems to be a problem, and people have been reluctant to buy. So hopefully people will start buying homes again because that's a real big part of the economy. Not only do people buy their homes and then they have to go to Lowe's or Home Depot and buy stuff to furnish their homes, they start doing all that stuff. It's a big economic cycle, buying a home.
Mm,
So
right,
hopefully
right.
we see better home results in 2026. It's been like the dollar, man. It's been down.
Yeah. Where are you located, by the way?
Right outside Charlotte, North Carolina.
Oh, okay. Very
Yeah,
nice.
yeah. So an interesting
So
home buying market.
yeah. So I just, someone just graduates college and they're starting their professional career and they're thinking about creating a good financial future for themselves and particularly financial freedom. Would you give them any piece of advice you'd give them to help achieve and get themselves on the right path for financial freedom?
The fire investor or just the general person who's trying to uh, eliminate debt. If you're just out of college, like student loans are probably going to be one of your biggest debts. Hopefully you
Mm,
figure out a way to go through college without too much debt. There seems to be a push for people to go to trade schools or traditional colleges and reduce your debt before you come out of college. But you don't want to keep taking on debt. That first credit card they send you, you can cut that up. They'll send you another one. Maybe start with a secure credit card so you can't go over your limit. Like you can just put as much money as you have on there, but you're also building your credit at the same time. If you have a job, set up your 401k, start investing in that. If you don't understand, at least invest it to a match. You could put it in a target date fund. I'm not really a fan of those, but if you don't understand, at least you're investing and getting that thing starting to grow. And then you want to have some cash invested in something high yield, not just in the money market or in like 0.25. You want to put that as like a high yield savings account. And then just like people tell you, and then just save more than you spend. If you can
right.
always save more than you spend, you'll be fine eventually.
Yeah. And I like to look at it as like, if you're trying to build a really good future, you got to look at everything as opportunity cost.
Mm-hmm.
When you want to get a really nice apartment for rent or you want to buy yourself a super fancy car, you need to realize that that is money that you could have invested and done maybe doubled it, tripled it, quadrupled it. So the way I see it is when you're out of college, you're not supposed to, it's not your time to bathe in your wealth, to live a luxurious life. It's your time to think like a poor person where you're saving money, you're calculated, you're strategic, you're learning how to do as much as you can with as little as possible. And you're saving. Like you're saving like it's your last dollar. And if it means getting a slightly less beautiful apartment so you can have more money, that's how people create really beautiful futures because that allows them to get to that beautiful future as quickly as possible. The guy who blows his full paycheck every month, partying, going to fancy restaurants, buying fancy cars, looks cool right now, but he ain't getting too far because he's not able to build anything. So, and that's a mindset. It's not about like knowing the best stock. It's not about, putting it in the right, investment fund or this and that. It's about adjusting your mindset to think like someone who's going to make a ton of money, to think like a rich person. Because what you want is to know, how do rich people think? And that is a very specific way. Everything is opportunity cost, right? If you can get from A to B with $5, but you've spent $50, that is just inefficient. And if you are living in a place where rent is 10 times higher and there's no need for you to live there, that is loss of a lot of opportunity.
Right. The wealthy don't spend their own money. If you haven't like ever noticed that, they'll have assets that they pledge, stocks or things of that sort. Think about, go back to the AI for a second. You hear a lot in AI right now with circular investments and the type of investments inside these companies, NVIDIA getting money back from it. But then Oracle came out and said they're going to finance some of their debt. And people are upset at Oracle.
Yeah.
Like, why are you financing your debt? Well, of course, Oracle will finance your debt if they're going to pay 5 or 6% on this loan versus pledging some of their stock, which might go up 25, 30%. That's the
Right.
opportunity cost you're talking about, right? Where you give this stock away and you're going to miss that percentage on the upside. I like to think about it like this as far as like personal, tying it back to the personal finance where you're saying, if you can live different for 5 or 10 years now, you can live different for the rest of your life. And by live different, I mean like living like you're saying, like where you're just not getting that extra stuff. That stuff is cumulative. Eventually it adds up. Like those dollars you aren't spending, they will add up and snowball into something larger into like later in the life.
Yeah. Yeah. It's so important you learn how to do as much as you can with as little as possible. And
Mm-hmm.
I guess that segues into my next question. Any piece of advice you would give to someone who wants to develop good habits for long-term stability?
Okay. So yeah, if you want to develop good habits for long-term stability, automate your saving, right? Get that stuff just coming out your account so you don't even have to worry about going and doing it. Automate your bill payment, automate as much as you can with your finances so that stuff's coming out and you're not even have to look at it, right? You know you're accumulating, you know you're saving. Get in the habit of saving, right? Invest in something. Invest in your 401k, invest in some real estate, invest in yourself is the biggest thing, right?
Yes.
Because if you're
Yes.
not investing in yourself in whatever type of way it may be, whatever you're doing, uh, your wealth won't grow anyway, or you'll get your wealth and
Yeah.
you'll just lose it.
Yeah. Like if you think you're busy now, you're only going to be more busy in the future. You're just out of college, right? You have the world at your fingertips. And here's a piece of advice here. We all want success. It's almost an irrelevant question to ask someone, do you want to be successful? The answer is obviously yes. The real question is, what are you willing to give up to get it? Are you willing to give up partying on the weekends? Are you willing to give up your fancy car? Are you willing to, give up your nights and hone in on a new set of skills and master a new craft? That's the real question. And if you tell yourself, oh, I'm going to learn it in the future, that's the exact opposite mindset you want. You want to say, now I have all the time in the world. Imagine when I'm married, I have kids, I have other responsibilities. Life only gets more difficult. It doesn't get easier. So I like to think of it like every second that I'm not becoming smarter and carving out my skills, my competitor's getting one step ahead of me because someone out there is doing that.
Mm-hmm. You got that right. There's always someone up a
Yeah.
little bit earlier, someone else putting in a little bit of work. But as long as you know you're doing the best that you can do and like pushing yourself to your limit. And then that's another thing. People don't realize that you don't understand everything. Don't be afraid to seek out experts for what you don't understand, right? Like
Yeah.
I have a understanding of finances, but like if I need to build a deck, which I actually used to do, but I couldn't build, like I used to be a helper, but I couldn't go out and cut all the woods and build my own deck. That thing would be crooked, right? I would pay someone to do that. You know what I mean? Like know what you're
Right.
good at, know what you know and
It's
know what you don't know.
That's how the economy runs. That's why we don't have to raise a cow to make a hamburger, right? It's
Right.
and that also ties really well into the conversation of like AI and ChatGPT, right? We're entering a world where we really need to double down on our uniqueness factor. Anything that can be patternized and delegated, anything that is a B plus skill, an A minus skill, that is something that is at greatest threat with GPT. You want to look at yourself every morning in the mirror and ask yourself, what is truly unique about me and what is noise? What could I patternize and delegate? And what is really hard to replace? You want to quadruple down on the thing that's really hard to replace. And you want to delegate everything else because that's how you're going to survive in this really quickly changing landscape.
Right. You have to make AI your tool. You have to figure out, I'm a big block scheduler dude. So like I do things in blocks inside the blocks inside the block, but it's very efficient. Like figure out whatever it is your way that you're going to use your time. Time is so people, it's a debate, right? It's a debate. What's more important, time or money? You know, you can't get either one back. Can you? Can
Right.
you truly get money back if you lose that dollar? You might get another dollar back, but you won't get that same dollar back. So time versus
Yeah.
money, what's more important? You just got to figure out. And for different people at different stages of your life, like you said, when you're younger, you have more time than you have money. So you should be working on earning money. And then as you get older, you have more money, you have time, and people start worried about, say, they realize like, whoa, I've spent all this time earning money. What am I going to do with my time now?
Right. Right. So Marcus, you're full of wisdom. You've been doing this for years. I have a question for you. Who is your mentor? Who do you look up to? Who has carved your mind that you recommend other people follow?
Oh man, that's a really good question. So there's not like anyone you're going to find on social media that's going to help you. That has particularly helped me. It's like I said, I grew up in small business world. Like I worked with some people. I had some really good just owners of people who own their restaurants. I worked for the Johnson family. They were really good with me. I learned a lot over it. The first financial plan firm I was with over at Tri-State Financial Advisors, those guys are great. They did a really good job of just pouring in and filling me up as far as it goes. As far as like mentors in life, I've had some really good coaches who just helped me out in life. For
Any
sure.
books that you read that you were like,
Dude,
man, this really is good
I
way
read
to think?
I read all kind of books. I love books. I love reading.
Fill me in.
So
Give me
if
the
you
secret books.
okay, yeah. So if you're young, people always ask me about books and where to start out with. So I'll usually say, you can start with, and it's going to sound cliche, but it works. Start with The Prince by Machiavelli and The Art of War. Why do I say The Prince and The Art of War? Because The Art of War shows you how to tactically approach different things, right? And then The Prince tells you like how to manage these things once you've gotten them in different ways that you attain them. So there's the prince who attains it by power, a prince who attains it by like someone who just implied power, like they didn't really have the power, but someone gave them that thing. So like if you take about power by paying mercenaries, that's a different type of power. That's a different type of thing. So it's just like those two books, sit back with your mindset. I love those. As far as I love Stocks for the Long Run. That's a good book. For if you want to learn about investing, that's a really good book actually. If you want to learn about investing, Dr. Jeremy Siegel wrote that, and it really goes back through the history and just talks about stocks and bonds. So yeah.
Great. And Marcus, where do you see the finance industry, particularly investment stocks, crypto, in the next 5 to 10 years? And where do you see yourself in the industry?
5 to 10 years. I see the market's higher in 5 to 10 years. Not crazy higher like it's been. Yeah,
that's good to know. You're bullish. Okay.
We may have had a bubble by then. I will say that we may have had it may have gone down and come back up in the next 5 to 10 years.
No.
But I think the market's higher than where it is right now. Just like look back at the history of the stock market. Look at where it was 10 years ago, 20 years ago, 30 years ago. The market goes up. Sometimes you have 10-year periods where the market goes down, but in general, the market goes up. So I think the market's going up. I think Bitcoin will be a much larger part of the economy than it is right now. One of the things that people have noticed with Bitcoin is like, as crypto and Bitcoin has come down, it's been as the stable coin and stable dollar coin has increased. Right?
That is the narrative this bull run. It's all stable coins. I agree.
Right. So but there's only so much money that can go in there, right? There's only so much money in the economy, which would be an entirely different problem if we just start printing more money.
But it's really a tiny percent. What's in the whole crypto market cap is such a tiny percent. I mentioned this earlier. The amount that gold lost in the past 2 weeks, so I think it was around $4 trillion, is a greater market cap than the entire crypto industry. So it's going to play a huge role. Right. And everyone, you always think you're too late. Oh, I wish I invested in Bitcoin 2 years ago. I wish I invested in Bitcoin 5 years ago. Mm-hmm. You will always make that argument.
There'll be an opportunity.
What if it goes down? It always might go down. That's why if it only went up, there would be no reason not to buy it.
Trees don't grow to the sky. Trees don't grow.
Yeah.
Right.
Yeah.
And then I don't know personally, 5, 10 years, I guess I'll see myself just firm full of clients, helping people, maybe doing a lot more of these podcasts, sitting down talking. I love to spread the message, man. Just financial literacy. Don't be intimidated by money, folks. But respect money. Don't be intimidated by respect and learn about it.
And be educated and take smart risks.
Right.
That's how you make money in life. You take, not financial advice, but you take smart risks. You're not going to casino. You're going to study the fundamentals of what you're putting your money in. You're going to gain conviction towards those fundamentals, because in order to make money, you got to watch things go down. You can never time the bottom perfectly, and you can never know when to sell perfectly, right? Sometimes you're going to catch a bit of a falling knife, but if you have conviction of what you're putting money and you don't have emotional impulse towards it, that is the secret to becoming a successful trader. And so Marcus, how could people get in touch with you?
Yeah, people can get in touch with me. They can reach out to me I'm on LinkedIn, or they can check out I have a personal website, MarcusSturdivantSr.com. YouTube, I'm on YouTube. You can go to my business website, theabcsquared.com.
Wonderful. Marcus, thank you for your time and wisdom. It's been an honest pleasure.
Yeah, man, it's great sitting down talking with you, Mike.